Please understand we are providing free training, complete free training on supply demand zone price action. You can visit our YouTube channel and you can go to the home page. You can click on the home page and then scroll down to the playlist supply demand zone price action course. So click on this playlist and you will be able to access all the lessons starting from lesson 1.1, 1.2, 1.3, lesson 2, 3 until the most recent lesson. And even all the upcoming lessons will be placed under this playlist. So please go through all these lessons one by one starting from the first lesson. And after that you can get into this practical lesson. So now let's get into the practicals. Okay, here in the practicals, we will be focusing on three important points. One is identifying the HTF location, that is buyer's area, seller's area, and equilibrium. We call it as a location, or we can also call it as a curve. And then in ITF time frame, we will identify the trend. And in LTF time frame, we will identify what is our entry, what is our stop loss, and what is our target. And there is one more important point, price direction. Price direction I am avoiding for time being. In the previous video I have given overview, but a lot of scenarios we have to discuss about the price direction. In the upcoming lessons, we will have a detailed discussion on the price direction and then we will have some practical sessions on that. Because combining everything at this stage really gives you some confusion. That's why let us learn in a step by step. Okay, now let me get into a stock Z Limited. This is a monthly time frame. Because monthly time frame we are using, in this example, monthly time frame we are using for higher time frame. In higher time frame, what is the goal? We need to identify a demand zone and a supply zone, and you need to identify the range between a distal line to distal line of demand and supply zones. You have to divide into three parts, and the first part should be the buyer's area, second part is the equilibrium area, and the third part is the seller's area. Let us identify. Here I have already drawn these zones. See, here we have a drop, 3 base candles and a drop. So this is a supply zone. Or I will clear everything. Let us draw starting from the beginning. Okay, here we have to identify your demand zone and supply zone. Here I identified a supply zone drop, 3 base candles and a drop, and also identified a demand zone, a drop, 4 base candles and a rally. So let us draw these zones. But this is a supply zone. Which supply zone? Monthly supply zone. We have already created templates. I explained in the previous practical session. So as per that, the color selection will be there. Because this is a monthly zone, I am selecting monthly supply zone, MSZ. This is the template. So we got a very light red color for monthly time frame zones. Next one, we have a daily zone, demand zone, drop, base and rally. So let me draw. And this is a monthly demand zone. So I am selecting MDZ template. So we got a very light green color. Now in the monthly time frame, prices are moving between this demand zone and this supply zone. And this is the HTF zone, higher time frame zone. So what is the objective in a higher time frame zone? We need to identify buyer's area and seller's area. Of course, apart from that, one more, that is equilibrium. Equilibrium is favorable to both buyers and sellers. But buyer's area is mostly favorable to only buyers, and the seller's area is mostly favorable to only for sellers. I'm using the word mostly. Why I'm using mostly, you will understand once you get into the advanced strategies. But time being, buyer's area you have to use it only for buyers, and seller's area you have to use it for only for selling purpose. Okay, here what is the rule? The rule is we need to divide this entire range. What is the entire range? Distal line to, sorry, yeah, distal line to distal line of demand and supply zone, D to D range. So for that, I am using a trend line. The name of the trend line is info line. So from distal line of this demand zone till the distal line of this supply zone, I have drawn a straight line. Let me adjust properly. Okay. Okay, what is the next goal? This entire line we have to divide into three parts. So what is the total range of this? Around 223 points. 223 rupees is the range from 175 to 400 rupees. This is the range. So total around we have 223 rupees. We can say 223 points. So this 223 points you have to divide into 3. So simple, very simple. Take a calculator. 223 divided by 3. We got 74.3. So what I do, I will save this value in this calculator memory by clicking M plus. So every time by clicking this MR, the memory will be released. Okay. Now what I am going to do, from this low of this zone, that is the distal line, from this distal line. What is the low of this zone? If I place my mouse on this candle, I can see on the top L, that is 170.10. So 170.10 plus, we already divided into 3 parts. So what is each part value? From the memory, let me release, that is 74. So 170.1 plus 74.3. So what is the value? 244.443. So we can say approximately 244. So let me draw a horizontal line at 244. Okay, it's coming 244.70, okay, approximately. So that means this is the, from this distal line of this zone, from here, this is the, this area is buyer's area, and the technical name is low on the curve, LOC. This is buyer's area. So for your easy remembering purpose, let me add a text. This is buyer's location. That is LOC, low on curve. Low on curve or buyer's area, both are same. Buyer's location, sorry. Location is the right word. And what about the remaining? So again add another 74.3 for this value plus memory release 74.33 equals to 318.76. Say we can say approximately 319 or 318.7 or 319. Let us draw the horizontal line. Three 319.50. Sorry, something wrong. Yeah, 318.15 approximately. So this one is we have seller's area that is high on the curve. And in between we have equilibrium. So we have identified three areas: seller's area, equilibrium, and buyer's area. If you want to buy, which area is good? Either buy area or equilibrium. If you want to sell, which area is good? Either seller's area or equilibrium. So one of these areas you have to plan your buying or selling related trades. Can you plan your selling trade inside the buyer's area? Similarly, can you plan your buying trade inside seller's area? That is not correct. It is like during a very hot summer days, you are planning for a holiday trip in the desert. Already it is a hot summer. Going to the desert as your holiday trip is not a good choice. Exactly the same way, if you want to buy, buying in seller's area is not a good choice. Similarly, if you want to sell, and selling in buyer's area is not a good choice. That is the reason why to identify our trade plan, we are identifying this buyer's area, seller's area, apart from this equilibrium. When prices are entered into this buyer's area, plan for a long trades. When prices entered into the seller's area, plan for our short trade. This is how your trade should be planned. If prices are within the equilibrium, you have to plan either long trades or short trades, provide the direction also plays the major role that we discuss later. Okay, now we have identified in monthly time frame the buyer's area and seller's area and also equilibrium. So what is the next step? The next step is identifying the trend. What is the trend of the stock? So which time frame we will identify? In intermediate time frame. If your higher time frame is monthly, one time frame below monthly is intermediate time frame. So weekly should be your intermediate time frame. So let us go to weekly time frame. Now this is weekly time frame. So what is the trend of the stock? See, now prices are moving up in this direction, in the up direction. See, already previously there is a leg candle, two base candle, drop candle and a follow-up candle. And this supply zone is broken by this entire candle. That means your downtrend is changed to sideways. And after that, again in this you have a leg candle, you have four base candles, and then you have a drop candle. Now again what happened? This supply zone is also broken. Now your trend is changed to uptrend. Maybe here you may argue. Here both these zones are almost, they are very near, overlapped. There is a concept called LOTL. When LOTL is there, what is the rule I told you? If both the zones are broken, then only trend will be changed. In that situation, violating this upper zone, when you have two zones overlapped each other. So to bring clarity, let me draw the zones. This is a weekly supply zone. We are on the weekly time frame. So we have a weekly supply zone, and we have one more weekly supply zone. And we have one more weekly supply zone here. So now what happened? Prices are moving up. By violating, because this is a LOTL concept, by violating both these zones together, now trend is changed to sideways. That way you can calculate. Now trend is changed to sideways. Now after violating this supply zone, now trend is changed to uptrend. Now prices are moving here only. Now at present, the trend of this particular stock is uptrend. So now we have identified by location, 3 locations we identified on the monthly time frame. Now in weekly time frame, we identified the trend of the stock is uptrend. And third, your entry. So to identify your entry, your stop loss, your target, where you have to go. Now one more time frame below. What is one more time frame below for weekly? That is the daily. So daily is going to be your LTF. So that means in this example, daily is our LTF, weekly is our ITF, and monthly is our HTF. That is higher time frame, intermediate time frame, and lower time frames. Okay, now let us move on to our lower time frame, that is LTF. So I'm changing the time frame to daily by clicking D. Okay, now do we have any zones here? Which zones? So daily zones. So from always, previously also I told you, from the current price, go back and find the most recent demand and supply zones. So here we have a drop candle, we have 2 base candles, and we have a leg-in candle with the gap up. So let us draw the zone. Which zone it is? Demand zone. Which time frame it is? Daily. So DDZ I am selecting. I am giving the color for daily demand zones. Okay, similarly now you go backward and see which is the nearest supply zone to this current prices. This is looking like a nearest, but this is already drop, base, drop. This is violated. This is pierced. So let us look for a zone which is not pierced. So here we have a zone. We have a rally candle, 2 base candles, and a drop candle. So let us draw the zone. Which zone we are drawing? Supply zone we are drawing. Which time frame? Daily time frame. So I am selecting the template DSZ, daily supply zone. This is the color given for daily supply zone. Those who are not aware of these colors, please go through the previous practical session. There I clearly explained, I have shown the settings of all my demand and supply zones for different time frames, so that you can configure and create the templates for all the time frames. Okay, now we have identified demand and supply zones on the daily time frame. Okay, because I identified a demand zone, what is my goal? Next time in case if prices entered into this demand zone, can I buy or not? That is my goal here. For that, 2 important factors we need to observe. What is the first important factor? The location should be in my favor. Is the location is in my favor? Is it in buyer's location? No, it is not in buyer's location. Okay, if not in buyer's location, at least is it in equilibrium? Yes, it is in equilibrium. So equilibrium is favorable to buyers and sellers. Okay, if it is favorable to both buyers and sellers, we can take a trade in this zone if trend is in your favor. What is the trend? The trend is uptrend. Because the trend is in our favor, we can take a trade. Of course, you should also look into other factors like direction that we will see later. Now remember, we are learning in step-by-step process. First, you are learning a small problem, and then on the top of that small problem, we are adding some more concepts, and finally, you are learning the whole concept. If I mix everything, maybe in the initial stage, you may get confusion. So, to avoid that confusion, please remember I am explaining in step by step. So, that is the reason why let us don't bring any discussions related to direction now, but remember at later lessons we will also discuss about direction. After that we get 100% clarity. Why I am telling this point? Because I don't want you people to mix, I don't want you people to fix in your mind. This is only the concept for buying and selling purpose. No, no. This is only a starting point. Okay, as per our initial level analysis, this is a good zone for buying point of view because it is in the equilibrium. If prices enters, we can take a trade. The reason is location is supporting and trend is also supporting. How trend is supporting? We already analyzed it. It is an uptrend. So now uptrend is our friend. When uptrend is our friend, we have to take buying decisions. But location also should be in our favorable. If the trend is supporting, but location is not supporting, then you cannot take the trade. That means both the trend and the location should be in your favor to accept the trade. Okay, in this particular demand zone, location is in our favor and also trend is also in our favor. Later on you will learn direction is also in our favor or not. That is after a few lessons we will learn. Okay, now as per these 2 points of view, which 2 points of view? Location point of view and trend point of view, this demand zone is in your favor. Okay, now when it is in your favor, can we plan the trade? Yes, we can plan the trade. So when you plan the trade, what are the 3 important things we are looking for? We are looking for set, a stop loss, entry and target. So what is your target? What is your entry? This demand zone proximal line is our entry. You have 2 options. If the risk is high, you can change the risk from type 1 to type 2. If you feel even this risk is very high, type 3. What is type 3? The lower body of these base candles. And type 2 is the higher body of these base candles for demand zone. What is type 1 entry? The highest wick of these base candles. Among these 3, which one is ideal? Type 2 is ideal. Most of the scenarios, type 2 works. So now I have adjusted the risk from as per type 2 point of view. Now what is your stop loss? The distal line. The distal line is always the low of the demand zone. For demand zone, low is the distal line. For supply zone, high is the distal line. So low of this zone is the distal line. So now what is your total risk? Let us draw the info line. So this is the risk. So 8 rupee 85 paisa. Why I have selected negative values? To indicate it is a risk. So if we lose 8 rupee 85 paisa if the risk is occurred, which is 3% of our capital, 3.42% of our capital. Okay, how much maximum capital, from what is the maximum percentage we can use in our capital? All these things we will discuss in the risk management session in the second phase of our training program. Already we discussed the risk management concepts in the first phase. So by end of the second phase, you will be learning again some other advanced concepts related to the risk management, and a few more techniques also you will be learning for minimizing the risk based on this multi-time frame analysis. After completing all the concepts, I will tell you what is the exact maximum acceptable figure for accepting the risk. But time being, remember, this zone is having a 3.42% risk. Okay, what is the reward? The reward is from this proximal line till the low of the supply zone. So let us draw info line to identify the target. The info line, I am drawing. Okay, this is the reward. So how much? So 36.55, 36 rupees 55 paisa is our reward, which is 14.17% from your entry. From entry, you are going to get 14.1% reward you are going to get. In case if the trend is against you, you are going to get from this entry till this digital line stop loss, you are going to get 8 rupees 85 paisa loss, which is 3.42%. So what we do, let us identify the RR. How do you identify RR? The risk divided by the stop loss. I mean the the reward divided by the risk. The reward divided by the risk. So let us take the calculator. So what is the reward? 36 rupees 55 paisa. 36.55 divided by 8.85. You got 1:4.1. That means we can say approximately 1:4 reward we are getting. Anything above 1:3, anything equivalent to 1:3 or above 1:3 is a very good. But as a big at your starting level, always look for at least 1:5 reward or close to 1:5. So 1:4 point is a very good trade, excellent trade. In case if prices come here, because all the conditions are supporting. What is that supporting? Our location is supporting and also trend is supporting. That way we can identify this is a good zone. After learning direction also, you will be, by adding that point, we will identify whether really this is a good zone or not a good zone to accept the trade. But based on location and trend, remember, based on location and trend, this zone is a good zone. By adding other factors later, we will decide this zone is really a good zone or not. But timing, it is a good zone. That way you remember. So we have 1:4 risk reward. That means for every one risk, you have 4 rewards. That means every 1 rupee you lose, you are also, it's not 1 rupee you lose, it is 1 rupee you have a potential loss, you have 4 rupees a potential profit. That is what you have to understand. It is not that you lose 1 rupee. It is a potential. Risk means it is a potential loss. Potential loss. Reward is a potential profit. That is expected profit and expected loss. In case if trade goes against you, that is expected loss. In case the trade is in your favor, that is expected profit. Now we have identified this demand zone is a good demand zone because it is in buyer's area. Then what about the supply zone? The supply zone is in equilibrium. So it is also in supporting sellers. Equilibrium supports buyer's area as well as the seller's area. So according to the location, the supply zone is also a good supply zone. But what about the trend? Do the trend supports selling decisions? No, because the trend is uptrend. Selling decisions against the uptrend is not a good decision. That means if you are going for a short trade, trend is not in your favor. Location is in your favor, but trend is not in your favor. This is the important point you have to observe. See how we are changing our decisions. Our decision making is getting changed by using two important factors. One is location and another one is trend. Identifying the location, you used higher time frame, and identifying the trend, you used intermediate time frame. So please remember these points. So this is the way we are able to take a better decisions. Basically, we are increasing the probabilities to get the success. How we are trying to increase the probability? By using the concepts like identifying buyer's location and seller's location and also equilibrium. Apart from that, we are also identified the trend. Later, we will also identify one more important factor, direction. That is price direction. I hope you are able to understand at least these two, how to identify the trend and how to identify the location. And also how to identify our trading zone. What is our trading zone? LTF zones. So is our trading zone is within the buyer's area or within the seller's area or within the equilibrium, you are able to identify. This is the most important point you should remember from this exercise. The goal of this exercise is to identify where exactly our LTF zone is there and also what is the trend. So where exactly our LTF zone is there, that is possible in HTF. If you divide this entire HTF demand zone to supply zone, if you are dividing into 3 equal parts, then only you will be able to identify. That is what we did that exercise. So in case if you have any questions, again repeat this exercise how we did.